So I understand the desire to do something, but regulation by enforcement is not really a path forward that is really workable for US companies who are attempting to comply with the rules, but they don't know what the rules are. So it's a little bit of a catch-22, to be candid.
The U.S. Securities and Exchange Commission is cracking down on crypto exchanges who don't properly disclose the intricacies of their staking operation. But do the folks at the SEC understand the various staking approaches to rightly regulate the many crypto firms out there? Thanks for watching.
Well, joining us now to discuss regulators' next moves is Meltem Demirors, Head of Strategy at CoinShares. This segment brought to you by Intuit TurboTax. Good to have you on the show, Meltem. Obviously, a lot of confusion here. It can be a little bit hard to know exactly when you've sort of stepped outside the bounds of the SEC, as we've seen here, especially after that announcement that we heard about Kraken. We saw that SEC Chair Gary Gensler saying, look, this should put everyone on notice in the marketplace. How are some of these crypto companies heeding this, though?
Look, crypto has long been regulated. Anyone who's providing financial products or services and offering them to U.S. customers or operating in the United States is subject to the rules and laws of the United States. And as the video from Mr. Pitt showed, there are a lot of companies in this space who have been trying for years. Kraken has been actively operating for over a decade now to follow all of the different rules, whether it's securities laws, whether it's tax laws, whether it's OFAC and compliance laws when it comes to sources of funds. So the biggest challenge we have here is we have a regulator who is attempting to regulate by enforcement. And at the same time that this regulation by enforcement is happening, there's also been a massive de-risking across the space. Banks are evaluating the risk of being a counterparty to crypto companies. We have auditors saying we want to de-risk our business because, again, there's just all of this additional scrutiny. And after the last year, we saw Celsius, Voyager, FTX, and a number of other platforms have material failures, material breaches of fiduciary responsibility. So I understand the desire to do something, but regulation by enforcement is not really a path forward that is really workable for US companies who are attempting to comply with the rules, but they don't know what the rules are. So it's a little bit of a catch-22, to be candid.
The question is, what are companies to do when they don't know what the SEC is going to throw at them next?
It certainly does seem that way. We saw that Kraken CEO tweeted, oh man, all I had to do was fill out a form on a website and tell people that staking rewards come from staking. Wish I'd seen this video before paying that $30 million fine and agreeing to permanently shut down the service in the US. How dumb I look. Oh gosh. So it's really a case of, as you mentioned there, sort of this enforcement strategy. But then what can companies and some of these crypto exchanges do then if there isn't a way to really get ahead of what the SEC and other regulators are doing? Is it a case of lawyering up and just sort of bracing for what happens next?
Honestly, I think that is the path forward. We have a number of cases that are likely going to go to the Supreme Court pertaining to crypto. One of them, if you'll recall, is the situation this summer with Tornado Cash, which is a open public protocol that people can utilize to obfuscate certain data around transactions. That case is now going, to get much more attention. There are 2 lawsuits underway there. I do think one of the challenges here is crypto doesn't fit neatly into the box of existing financial services. And at the end of the day, it's impossible at this point, I think, to put crypto back in the box or to shut it down. The only thing that can be done is sort of to try to delay or temper its growth and its integration into the broader financial system by shutting down some of these on and off ramps, or at least restricting flow. And so I think there are going to be landmark cases. There are going to be companies that are going to pursue this path of action. But at the end of the day, it's a very costly route. It's very time consuming. And unfortunately, in the current market environment, there aren't so many companies, especially younger, early stage companies that may not have as much capital or as much financial resources, much social capital and political capital. So I think it is a challenge, but there needs to be case law. There needs to be precedent. And again, the United States, right, this case law is very important to setting precedents that can be utilized in the future. So I do expect there will be a lot of lawsuits that will happen, and a lot of these things will have to go to a level where these discussions can be had. It's disappointing to me as someone who's been working in this industry in the United States for the last 8 years, because there are a lot of companies who've been operating for the better part of a decade, who have a strong track record, who have appropriate governance, who provide transparency. And unfortunately, it's been very challenging when crypto is a regulatory political hot potato that gets passed around. But it may be that this is what's needed to provide that clarity and to establish the case law that will set a precedent going forward.
So who knows how to properly provide transparency as instructed without the SEC lawyers coming after them? Does anybody?
So then as we speak about things like clarity, but also credibility, when you look at some of the leading voices that the SEC relied on, of course, you have to talk about FTX's Sam Bankman-Fried, then who now are the leading voices that regulators could or should be listening to as they do try and shape the industry for the better?
That's a great question. I think one of the interesting challenges here is the transparency component when it comes to looking at on-chain versus off-chain activity. The issue with everything that happened in the crypto credit crisis over the summer is a lot of that was led by off-chain activity where there is no transparency. You can't rely on this public ledger, this public data source for verifying. And so one of the things that we think is really important is obviously having more publicly listed companies. In the US, we have Coinbase and a handful of others in Canada. CoinShares is a publicly listed digital asset investment firm, but we're listed in Europe. But I think the transparency of having audited financials that are published on a quarterly basis, along with guidance and commentary, is really important to helping analysts, investment banks, as well as regulators and investors understand some of the nuances of how companies earn money in this business. There are also companies that do a lot of voluntary reporting. And I think the last component is there's a lot of nuance here when it comes to crypto. Even when we use a word like staking and we're trying to understand staking rewards, every protocol has a slightly different mechanism. The risk implications of staking your assets are slightly different. So that nuance is really challenging in an environment where, I've been in this industry for almost a decade and I have trouble keeping up with all of the latest terms and the terminology is confusing. So there are, I think, multiple components. On the education side, there are a few great firms in the US, whether those are think tanks or trade associations that are trying to educate in Washington, D.C. But I think it is challenging because this is entirely new and it doesn't fit cleanly into how new markets have historically been regulated. So a lot of fundamental challenges. We're working hard to make progress to overcome those, but it's very expensive, very time consuming. And at the end of the day, it's very difficult when people are not willing to come to the table and engage with the industry.
Very true. You certainly need that clarity in order to be able to move forward. I do thank you for joining me this morning. Meltem Demirors, the head of strategy at CoinShares. Thank you so much
for watching, and I'll see you next time.